Welcome back to the course. In this module, we're gonna be continuing learning about reaccumulation patterns. All right. So these are the pause before making market making higher highs, and this is the secondary buying opportunity um, that we call a continuation pattern. Okay. This is where institutions add to positions during uptrends. All right. So what is a reaccumulation? Okay, I have actually told you guys before, but I want to actually go much more detail into this and actually prepare you to, in a way that like you'll be able to take trades on the reaccumulation continuation patterns. Okay, so you actually guessed it right. This is the reaccumulation pattern, that you're seeing right now. This is the trading range that forms during an uptrend. Institutions pause to buy more shares before price continues higher. All right, they are thinking as like, it's like we like this stock, but we need more. All right, so let's buy it quietly while prices pause. Okay. um, the complete reaccumulation map is this. You'll see uh, like this. You see automatic reaction, some sort of secondary test. It looks like a distribution structure. You have buying climax, automatic reaction, secondary test, then LPS. Let me actually add it there. You'll see. So I'll just add all this stuff here. You see, right? It's written here LPSY, but just remember the logic. All right. um, this is calculated on the midpoint. So if it closes above, that's your LPS. All right. So this is what I'm trying to teach you guys. You will see this sort of characteristics. Okay, continuation higher, resistance, it's breaking the creek. You see, and all this stuff. Okay, and here the phases are very fast. Phase A, phase B, phase C, phase D, phase. All this stuff can be completed in within one wave. All right. So um, let's continue. You see, phase A stopping the uptrend. It stops the uptrend here. That's your phase A. You can see this like we have already discussed this. All right. Phase B building the cause. There's not much. Let's just read through it. So that we can practice as well. AR automatic reaction is like where price reacts down from the high. This is automatic. Buying is temporarily exhausted. You see, reacts from the high here. Secondary test is price rallies back to test the high. Volume is lighter. This sets the range. So see here, it tries to test the high. Volume is lighter around here. And I'll actually add the volume here. Okay, trading through volume and this one. All right. So you can see volume is much less than this one there. Okay. Um, Phase B is building the cause. Institutions are buying quietly. All right. And price test the resistance multiple times. Each test shows less selling pressure, volume decreases. Okay. A key characteristic is price stays above the support. It doesn't break down. This shows underlying strength. You can see, all these tests, but price can't even like, break below the support, right? You can argue even here as well, but it did break below the support a little bit, then it goes up, and then this was your real accumulation distribution structure. But all these stuff, you can see low didn't got broken, right? That's why these are reaccumulation structure. Okay. So phase C test the LPS. You can see LPS here. All right, backing up action. Right. Price test support one more time, and this is the LPS last point of support. It's like a mini spring. All right. Price may dip below support briefly, then it recovers very quickly. All right. You can see here. Volume should be low on the test, and if volume is high, be cautious. Okay, it might not be reaccumulation. All right. So sign of strength, I actually told you guys about this. All right. When we see this like big candle, very high volume breaking above the resistance, that's your sign of strength. all right? When it pulls back around here, candle by candle looking into it, this is your backing up action, all right? So this is, in another terms, we call this a breakout. Okay, so sign of strength is where price breaks above the resistance with very high volume and widespread candle. You can see that here, right? This confirms that reaccumulation and the pause is over. Okay, and then it just goes up here, right? So this is what, and then this is what we need to understand, right? Sign of strength, breakout, uh, that's actually one of your very early sign that this is a reaccumulation. All right. Phase E, continuation higher. So here trend resumes. Very short pause and then trend resumes. This is after the backing up action. You can see, like, when the price pulls back around here, then it goes up. You see, price pulls back and then it pulls back up, goes up, right? So here price continues much higher and the uptrend resumes. Okay, institutions have finished buying and they're ready to push prices up. You can see here, right? They are buying, and then when they're ready to push the prices up, they're finished buying, then boom, market just goes up, right? So you have seen, like, all those phases are combined in one wave. All right, so that's why it's very effective continuation pattern if you want to make quick quick money in faster time. All right, the continuation pattern, reaccumulation. So this is where you want to be long, because you bought the pause, not the top. All right. See, you have bought it when the market paused a little bit, then you went up. You again bought it on LPS, and then you made the money like that. All right. You again bought it on backing up action, then you made the money. All right. Here you might be like wondering, till this it was a reaccumulation, but then after that it was just making lower highs, lower lows, and all this stuff. All right. So key differences between reaccumulation versus distribution is that in reaccumulation, it forms during uptrend. Okay, it doesn't form on the top. It forms as the market is going up, like that. All right. Um, it kind of looks like a staircase, as you can see. Price stays above the support, check. All right. Volume decreases during range, check. We have seen that volume decreases, the down wave is much smaller than the up waves. All right, it breaks out higher and higher, and previous structure was accumulation. This is very important, guys. You can see, where does it coming from? It's coming from this big accumulation. So all this small distribution structure that it might telling you it looks like distribution, these are reaccumulation structure, because previous structure was accumulation. Okay, distribution is the key differences between reaccumulation and distribution is that distribution forms after uptrend, whereas reaccumulation forms during uptrend. Okay, distribution price breaks below the support, you see here, but here in reaccumulation, price stays above the support. You see, in distribution, volume increases on breakdown, right? Here you see volume increases on breakdown, but in reaccumulation, volume decreases during the range. You see, during this range, volume decreases on the downside, right? It's much smaller than the up wave. You see on this one, even like it's very small wave, right? Um, and in distribution, price breaks down lower, while as in accumulation, reaccumulation, price breaks out higher. You see, higher breaking out, right? In distribution, this the previous structure was markup. Okay, you see, this was markup. After the markup phase completes, then distribution structure gets formed. All right, not during the uptrend. All right, and in reaccumulation, previous structure was accumulation. You see, this was big accumulation. All right, so these are the key differences between distribution and reaccumulation. Now, what are the volume characteristics that you might have? Is phase a moderate volume or automatic rally reaction? Very moderate volume, meaning it's like more or less medium volume. It's not more, it's not less, right there. It's lighter on secondary tests. Okay, you see, slight on secondary test, and phase B volume decreases, institutions buying quietly. I mean, I can't show you here where the phase B, I mean, you can see it, phase B is there still. You see, institutions buying quietly, you see sideways movement, and then when backing up action, boom, market goes up, right? So all those phase are basically, you can see it in one wave, all right? So test should be quiet, phase C, LPS, last point of support, backing up action, sign of strength, you see, sign of strength here happening, right? A lot of sign of strength there, right? High volume breakout confirms, okay? And backing up action, low volume pullback. Pullback is quiet, you see, pullback is very quiet, you know. And you might be wondering like, but AJ, it's like, you're telling me this is phase B, but then you're telling that like, breakout confirms, sign of strength. And see guys, like, this stuff that I'm showing you, without this, it's very hard to look at it. All right, can you tell me if if this is your sign of strength, or like if this is your backing up action? Is it really possible for you to tell it now? you know wouldn't it be like much more helpful when we apply this, and then we have more actually context into, okay, this this trend line is not coming from like, when this and this completes, then it's actually coming from way before in time. All right, and that's what, when the market comes around here, market has reacts to it, and then it goes up higher. All right, so remember the volume characteristics, it's very important. All right, so trading reaccumulation, your entry point, conservative entry is enter after backing up action. You see, like this, backing up action. All right, it's gonna be small trade, but you can actually make living with it. Like, I mean, 2-3% is good enough. I mean, it's not. We're not targeting for 10% or something, right? Like that. Okay, 3%, 4% within one day is good enough. All right. So conservative entry for reaccumulation is that we can enter on backing up action. You see, backing up action there. This is another backing up action, but on individual candle. All right. After sign of strength breakout, you see, after this sign of strength breakout, this is the safest entry point. Okay, this one. All right. Second one, if you're aggressive, enter on LPS if volume is low and price recovers very quickly. All right, I mean, you can actually take trade here. All right, LPS, and go with the trend. All right, so place stop below LPS or below support, below LPS or below support, like that. If price breaks below support, it's not reaccumulation. All right, so target should be use cause and effect, measure the height of the range, project it upward from the breakout point. All right, so this is what I want to show you guys. So if you go here, you can actually set that target here. In distribution, you might be wondering, there's like only short target, but there's also long target. That's why, when the long targets get hit, it was a reaccumulation, for that period of time. All right, so I just added there. You can see it's hitting this target, and let me actually replay that. Okay, so see, sign of strength, target, this is your target. Okay, let me actually oh yeah, we can't extend it forward, but yeah, you can see it hit the target there, right? This length and this length is the same there. Okay, this is your distribution structure, and then like it's the same uh, height. All right, so market goes there, comes back down, makes again a reaccumulation structure. So for this, the target is here, and you can see market, let me actually extend it to the right. Oh yeah, it is extended to the right. Okay, so you can see here, market, this is your backing up action, so you would actually take trade there, on this candle, I would have taken place my short there, uh, SL, and taken profit there, and see how it goes. It hit our profit target. Market stopped right there because that was the target level, that we are talking about here. You know, and then market comes down from right there. Again, it makes this structure, and it makes the take profit level around here. You know, so if I enter trade here, all right, um, like that, put my take profit there. Let's see how it goes. Okay, the secondary test pulls back, market goes there, all right, and stops there. Then it goes little bit, it stops even down, right, and then it goes like that. Okay, but still it hasn't reached our take profit level, right? So we should just like exit the trade on this red line. All right, yeah, like that. So this is how you can actually trade reaccumulation pattern. All right, common mistake that you might be making is entering too early before confirmation, so avoid that. All right, mistake two is like not checking higher time frame. All right, missing context. So if I actually check this on higher time frame, this all this stuff, this is going to be one wave. Okay, let me actually do that. You see around here, this this is the trade that we took on this wave, on up wave. This is where all those reaccumulation structure was forming. All right, so you can see, as you have context on higher time frame, right, that these are like a reaccumulation structure. All right, so mistake number three, ignoring volume. High volume on LPS is a warning. All right, so be aware of that. Whenever you take pullback trade, always look for low volume pullback. You see, this volume was less than that, so you would buy there. The market goes up, right? Mistake number four, not waiting for the backing up action. Entering on sign of strength breakout can be risky. Okay, so if you're taking trade on this one all this time for 2-3 days, you're just going sideways. Instead, after the breakout, wait for the pullback, backing up action, then you take trade, and then you can actually quickly book profit. All right, mistake number five is that confusing with distribution. All right, this is the biggest mistake that you can make. And I have shown you guys how to actually categorize or distinct between reaccumulation or distribution. All right, so key takeaways from this lecture is that reaccumulation forms during an uptrend. We see that, right? Price stays above the support, right? This is very critical. And volume decreases during range. All right, fourth is best entry is on backing up action or after sign of strength, like that. Okay, and always check higher time frames for context. All right, as you see here, on higher time frame, market was going up, and this is where we take two trades. All right, and you can see when coming on 4 hour, it's just like market sometimes goes down, goes up, and you can actually add it from trading to trading truth wave. If you come here and enable MTF1 zigzag, is going to plot that. All right, so you can see on daily time frame, this was in up wave. All right, and all these little pullbacks or so-called distribution were reaccumulation. All right, so moving forward, now it's practice time for you. All right, find some reaccumulation patterns, look for pauses during uptrends, identify automatic reaction, secondary test, LPS, sign of strength, and backing up action, and practice identifying these in the structure. All right, so I hope you guys learned from this lecture about finding out what's the difference between reaccumulation and distribution, and effectively apply it in your trading. So in the next lecture, I'll see you guys uh, about I'll see you guys when we are discussing about you know how to find uh, how to find out the difference between uh, accumulation and redistribution. Okay, so I'll see you guys there.